The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 12th, wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that truly is what it's all about. So let's go look at one of our tools. This is the tool that I call, and you should call as well, the present of being present. You know, focused concentration is absolutely a cornerstone for achievement in business and really all areas of our life. You know, we've got to zero in on whatever it is that we want to do. You've got to identify your target and let nothing stand in your way. You've got to keep your eye on the target, really, until you've released that arrow. You want to make sure that you let nothing divert your attention, let no obstacle come before you without getting around it. And when it comes to obstacles, I always say be like an ant. Doesn't matter whether you go over it, under it, or around it. Always try a different path until you prevail. And the key is concentration. Concentration is absolutely crucial. You have to focus. You have to filter out the noise and all the clutter that gets in our way. And on a daily basis, between the cell phones, between emails, between everything, there's a lot of clutter. Probably about 30,000 pieces of information that we're filtering out on a daily basis out here. Between the boob tube, between everything that is out there. And that, folks, is how you get around, just simply negativity. Get rid of all that noise and clutter out there, because negativity is the obstacle that will get in the way of what you want to accomplish and what you want in life. Let me ask you this question. In a tennis match, how long does it take for your opponent to return the ball? Yes, not very long. And what happens if you lose your concentration? Simple. The game is over before you know it. If you lose your concentration during a presentation, you could lose it all. If your concentration takes a lot of discipline, concentration does take a lot of discipline, but discipline, it will pay off, and it pays off big time. When you're at work, I say just simply be at work. When you're in a meeting, just simply be in that meeting. When you're with your kids, be with your kids. Focus, concentration always pays off. One of the greatest enemies of concentration, well, that's worry. And worry gets in the way of concentration, and most of our worries are things we can't control. Instead of worrying, just do the best job that you can at whatever it is that you are doing. When it comes to trading or investing, focus on your pattern. Focus on an indicator. Focus on your signal to enter that trade. Focus on your money management, and pull that trigger when you get the confirmation. Pull that trigger. And then let it just do its thing. There's nothing that you can control in that trade, so why worry about things that you can't control? Your focus, folks, your focus needs to shift, really, to your next trade out there. Concentrate on your next trade instead of worrying about the one that you are in. In the end, focus, concentration, folks, it'll pay off, and it is the present of being present. Well, I'm here to give you some gifts this morning, I hope, and thank you for being present. Let's go check out these markets here. Right now, we've got Dow futures up about 86 points. If you were a member of the Tiger's Den, as the market was moving down yesterday afternoon, I gave out some pearls of information, especially if you traded the futures out here. Because as the market was moving down, some folks might have thought that that was a bad thing. Well, the reality was you've got to be able to concentrate and take a look at a couple of different elements, gifts that the market is giving us at all times. Number one, the gift from yesterday was the fact that as the market was pushing down, which was what I was looking for, I sent out a update to my subscribers at 3 p.m. yesterday about the market, about the trades, and said, here's the deal. Looks like the market is going to push down into the close. We're going to see a reading in the one-day volatility increase, a volatility index of over 10%. And you know what that spells, folks? It gives you an 80% probability. 80% probability. How would you like that in your arsenal out there? An 80% probability that the market was going to bounce, at least based on the last 10 times that we've seen since the November lows out there. It's what I posted inside the den, so I'm sure that there are some folks that actually took advantage of that, went ahead like I did, bought the ES Mini as we came into that close out there. That was the low, and just, I've got a newsletter service called Mastering Probability. To me, it's really all about taking a look at probability probability, putting that on your side and going ahead and firing away. Now, one of the keys is, so that's a nice piece of information out there. That's why the market is bouncing right now. Dow futures up 87, S&P is up 10, trading at 1637, NASDAQ up 15. You remember yesterday the market was moving down, and I was saying don't jump in on the short side. Don't jump in at least right there. Wait for a bounce. The market gave ample opportunities intraday to trade it in both directions out here, and then coming down like the market did yesterday. That was another beautiful trade setup out there. So just know what it is that you're looking for. Right now, if we take a look at the currency market, King Dollar's up about 9 ticks. Relatively stable currency market out here right now. Gold is trading off of buckets at $13.75. Silver's up 4 pennies, so nothing big out there. Light sweet crude, that's up 81 cents. Trading out at 96.19. Over around the globe here, let's see, the China was closed last night, the Hang Seng and the Shanghai. The Nikkei certainly did push lower at the open, only closed down 28 points. That was a positive out there. Over in Europe right now, DAX is up 3 points, no big deal. FTSE is up 21. Our call number is 877-927-6648. A lot of information out in the news out here, about, is this a dip that you buy? Let's go actually take a look at the chart. Let's just let the chart pattern tell us what it is that we should do and turn off all the information. I'm just simply going to present you with the information that the charts are communicating to us, at least in my opinion, communicating loud and clear. If you're just listening in on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, this show streams live on those devices, on those smartphones. Just go to the homepage of TFNN.com. On the right-hand side, you'll see a button with 3 little smartphones. Click on that. The show streams live, and you can catch the archive of this on TigerTV on Channel 9, as well as pick it up on iTunes and so forth. So right now, what I've got on my chart out here that we're looking at is the ES Mini. I've got a 105-minute time frame. I can't even remember why I've got 105 minutes in my system, but it doesn't really matter. And you'll see a number of yeses and a number of nos on the screen out here. And I'm just simply going back because the trend is your friend. Is that correct? Yeah. And you want to trade in the direction of the trend. Is that correct? Yeah, I'd say that's correct. We're just simply going back into the April 18th time frame. And let's take a look at each of the dips that occurred out here. And did it make sense to buy those dips? And if you go back to April 18th, you can see that starting right from there. Yeah, it made sense to buy that dip. Did it make sense to buy it on April 19th? It did. Did it make sense to buy it on the 22nd? Yes. So you can see all of these yeses up until we get to this point right here, which is coming in on May 15th. We're at June the 12th. So as of a month ago, just to kind of give you an idea as to where we're at in the marketplace, the dip that we're taking a look at that came in right around 1 o'clock in the afternoon on May 15th, if you had bought that dip, guess what? You would not be in the money out here. So you've got basically 30 days worth of trading. It's not exactly 30 days, but close enough. What is it, 27 days, something like that? That if you had bought the dips going back to May 15th right there, it shows you that you're really on the wrong side of the trend that is now taking place in the market. Would you have been on the right side all the way up into the high that was established here on May 22nd? Absolutely. But now if we go back and take a look at where is the market, and what you can also see, what I also did, look, just drawing trend lines is important, is helpful, and in the case of trend lines, I'm just taking the bottom of a swing point. This one happens to be the bottom of the April 18th swing point, and I'm just touching the low that came in at about 4:30 on May Day, on May 1st out there. And so you can see the market most certainly was in an uptrend. When did that uptrend itself get broken? Well, it got broken with some conviction right here at 1:15 in the morning on May 23rd. And when you break a trend, what the market is typically going to do, it's going to go back up and it's going to test that trend to see if it was really a break. In this case here, a real break of a trend, because the market's moving up, would just simply be a move to the downside. Well, take a look at and I just drew this on my charts, as in the last 5 minutes before we were coming on to the air. Just simply said, well, what can I show folks about the trend that's going on in the marketplace? Tests that take place in the market. Let's just see what happened. The trend gets broken at 1:15 in the morning, May 23rd. And guess what? We get a test of that trend right out here at 11:15 on May 28th out there. Breaks a trend, goes back and tests it, rejects it. And now as we take a look at that trend line, coming off of the high inside the ES Mini, up at that price point of 1685.75. Now I've got a red trend line that I'm drawing here to the bottom, whether it's to be connected to that the swing point at 11:15 at May 28th, or it should be connected a little bit higher. That that will continue to monitor. But clearly, what we are seeing is a market in a downtrend now. So anything that somebody puts out there in the public media, puts on the screen, just take a look at the charts. Now, a longer-term chart has different meaning than a 105-minute chart here, but the trend has changed. How do we also know that on the longer-term chart? Just go take a look at the New York Stock Exchange. That McClellan Summation Index, it has taken a nosedive. 80,000 feet under the sea is where it's headed to. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Mcwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob Mcwen, as chairman, CEO, and president, owns 25% of the outstanding shares of Mcwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, Mcwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, Mcwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about Mcwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much change in the futures market now. During the break here, I just drew the new really downtrend. You know, I haven't used the channels, and the channels you'd use the co-located opens and closes, but just simply looking at the really the trend lines here at the tops of swing points, and looks to me like this is. We'll see if this. So what this says here, as we take a look at it, says that the ES Mini, which is trading right now at 1636, has a bit higher to go before it hits the top of that next trend line. Maybe it's at about the 1640-ish, 1642 level. Maybe it's another 4 points or so up there. We're going to have to watch that area very carefully, because even though there's some other patterns out here that I'm watching, which would be for the ES Mini to actually travel higher than that, it may just simply run into the top of this trend line that is being established here, and that may be the end of it, because the trend is most certainly down. You know, anyone that, in my opinion, that comes on television and tells you that that's not the case, I'm not really sure what it is that they're looking at, because, you know, I've got the chart here right in front of me. This is the S&P futures contract, and yeah, it's an intraday time frame, but all you have to do, as we were saying as we were coming off the air, is go to the daily time frame then and take a look at the New York Stock Exchange, which is a better indicator of the overall health of the marketplace. And that clearly is in a big downtrend here, has been ever since that key reversal session on May 22nd out there in the marketplace. You take a look at that summation index. That is your real trend. You want to be trading in the direction of that. And what that means here is, instead of buying the dips, what you really should be looking for is you should be looking to be able to sell all rallies out there. And so use these trend tools out here. There's plenty of other tools. In fact, if we go take a look at even a shorter term time frame, not 105 minutes. Let's go take a look at that 10-minute chart. We can see a number of different patterns out here. Now, remember I said that as we took a look at the trends there, and one chart had nothing to do with the other. I wasn't trying to, prove a point other than just simply draw the patterns that are on the charts in the different time frames. So now we said around 1643, 1645, something like that, looked like 1642, looked like that was going to be the top of the trend. Now, on a 10-minute chart out here, on the 10-minute chart, we actually have a 0.786 Gartley sell pattern that would complete right around the 1643 level. Now, what's nice about this pattern here, it's got an A to B equals CD. That's a requirement. If we take a look at the A to B equals CD point, we'd use the low out here at 9:50 in the morning on June the 11th. That was yesterday. That price, 1621.50. Your B point up here at the swing of 11:40 in the morning, right at the price level, 1639.75. Come down to our C that was created. That was created at 3:50 yesterday afternoon, down at 1624.50. 1642.72 would be the completion of the 1-to-1 A to B equals CD. The 0.786 retracement is at 1643.50 or 1643.25, and the 1.272 expansion of your B to D leg is at that 1643.25. So that's really nice Fibonacci numbers, everything, a pattern that is coming together. That's on a 10-minute chart out there. And so that is where I suspect, because we saw that trend line, we saw, we've got another pattern here that is setting up. We can see even on the 10-minute chart, it's not in the overbought territory out here. It's got some room to run to the upside. That's really the next pattern. That's what you should be looking at for a possible sell out there. It's going to be key to then pay attention to the candles. Let the bulls and bears tell you that the move is over. wait for a bearish reversal signal, and then you would go ahead and take out that arrow. You'd pull it back, and you'd fire away, and you'd concentrate on your target out there. And, of course, you want to make sure that you've got good stop management in place. Now, if we take a look at just how the markets, it's just probability is nothing more than numbers. It's just a game of math. If we take a look at smaller patterns on this same time chart out here, take a look at how you had a 1.272 expansion of a set of swing points. This happens to be the one that took place at 3:40 in the morning. The top of that was 1635.75. The low out here that came in at 4:20 in the morning, out at 1630.50. If you took the difference of those two, multiplied it times 1.272, added it to this low of 1630.50, it would take you right up to the 1637 price point. Take a look at another set of swing points inside there. This one coming in at 5:30 this morning versus that was the high versus the low that came in at 5:50. That happened to be a 1.618 expansion out there. And what did we see take place? We saw the market go ahead and pull back from the 7 o'clock time frame as that was occurring. Now, a normal retracement is going to be where? To sweet what? Sweet 618. Well, now let's go take a look at what we actually got. Looks like about a 50% retracement, a little bit more than that. Sweet 618 would have taken us to 1633. The ES Mini on the pullback got to 1633.50. It is a beautiful thing. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 109 points. S&P up 11, Composite up 19, Russell 2000 up 6, Google up 373, Apple up 87 cents, Microsoft up 39 ticks right now, Intel up 26, Cisco up 18, green across the board. Well, that is, unless you look at the red side. You've got Biogen, BIIB. They're the leader in the clubhouse on the way down, off 2.5%, down $5.80. Carl Icahn Enterprises having another tough day out here, off $5 and change, off 6.5% out here. First Solar off $2.30. That's down about 5%. We've got, let's see here, Legg Mason off 1.5%. Let's see, what else do we have? Candy Technologies. That's right. We looked at Candy. They're off 7% here this morning. KNDI. Remember, they were up with huge volume. Maybe we'll take a look at that stock chart if it remains on my screen. To the upside, it's Ulta Salon. They're up a nice 15% here this morning. We'll most certainly take a peek in on that. Cooper Tire and Rubber being bought out by India's Apollo Tires. That's a nice 41% premium on the close from yesterday. Celgene to the upside, up $4.36. Spectra Energy up $3.24. Herbalife up $2. You've got Tesla Motors up a couple bucks this morning. St. Jude Medical up $1.51. Goldman Sachs up $1.25. Again, our call number is 877-927-6648. Let's check in here on the currency market. Several days ago, I don't recall if it was Monday or it was Friday last week, we drew this pattern here in advance. We're looking at the euro-U.S. dollar currency pair. We're looking at the daily chart. And so, and I know it was at least a couple of days ago, and we were looking for patterns out here. We're looking for, the same Gartley buy and sell patterns. This case here, Gartley sell pattern. Now, on the daily chart, shows that right about the 1.3355 level would complete the beautiful Gartley sell, because you've got that same 1.272 expansion of your B to C swing point. So it's really your B to D area out there. So that is nice. If we go take a look at our retracement tool out here, and many of you don't have the same tool here that draws in these nice Pesavento Gartley butterfly patterns out here, but you can really recreate this in your mind, not in your mind, even on your stock chart. Just simply in this case here, go from the swing point high of February the 1st all the way down to the low that came in on April the 4th out there. And you're just looking for the major swing points, the swing points where you see a significant change in trend. As I draw that in here, you can see that I've got a line that goes across my screen. Looks like it maybe, let me blow it up here. Looks like 1.3340. And if we take a look at the high so far intra-session, it was 1.3333. How about that? So very close to completing that. Then if we take a look at, let's take a look at expansions now as swing points, because that's really what you're looking at. You're looking at your B to C swing point in order to complete that D area, and you're looking for an expansion. And you can see right up here at about 1.3363 is your 1.272 expansion. So you're going ahead and you're measuring swing points. You're looking for contractions, you're looking for expansions, and you're looking for where these numbers come together in a range. And in a range, because you're just simply, you don't know whether it's going to be at the exact, well, it's rarely is it at the exact tick out there, but you're looking for the range. Then once you understand the range, then it becomes really simple because your math work has been done. In fact, in this case here, what we know about this pattern on the euro-US dollar currency pair is that if this area doesn't hold, where is it likely going to travel to? That's right. It's going to go travel up to the next floor, the 0.786 retracement. And what else do we have up at the 0.786 retracement? That area, by the way, is 1.3503. What else do we have up at that 0.786 retracement? Exactly. We have a 1.618 expansion of our B to our C swing point that would create the D out there. So we know if this area, if this range fails, we know where the magnet is simply going to go ahead and draw price out here. Now having all this information, what is it that we do? Knowing that we are close. We don't know if it's a cigar yet. In fact, if we go put the relative strength, relative weakness indicator up on the charts, you can see here as we're hitting this area, we're right up towards the top of that range, about 69 right now. So that's another beautiful thing because you know when you start getting up towards the top of that range, you're moving into corrective territory, overbought type territory, and now all you have to do is you have to wait for the bears to show up. So ideally, what we see today is really more of a small-bodied candle. In fact, kind of like today, we'd prefer to see it be a green-bodied candle out there. And then tomorrow, see that body. You'd like to see it go ahead and complete, move a bit higher out here. Then tomorrow, what we see is a wraparound. We see that body, the next session, wrap around that in red, beautiful red out there, giving us a bearish engulfing type of candle out there. That would be your signal that it's ready to go ahead and enter the trade and pick this up. Now, because it's a daily chart out here, just like we look at on the other charts, if we take a look at it, your expected area of where this would pull back to, let's assume that it's right now is today's high out here. I guess that didn't. Let me do that again here. Because that was a little magic that I didn't even know I could do. Let me use today's high out here, and then we'll go ahead. The expected area, first, the area where if this pattern works and when you see the bears show up, this will pull down to 1.3108. That's assuming that today's high was the high, and we get a bearish candle today, maybe dark cloud cover, something like that. Right now, we do not have a bearish candle on the daily chart out here, but assume that we got that, just so for our purposes right now. The first area where this is going to bounce back to is going to be that 0.382. The next area where this would move, your typical outcome is going to be coming back to sweet 618. That would be down to about the 1.2969 level. So we've got a beautiful Gartley sell pattern that is setting up. It is not completed yet because the completion of any pattern is getting the signal that the bears, in this case here when you're on a sell pattern, that they have actually shown up, and they have not as of yet. Says it could go to higher prices. And that's the beauty of waiting for the signal, going ahead and paying a little bit more or paying a little bit less, depending on how it is that you are trading, to the upside or to the downside, but just simply waiting for the signal. Because if this area here doesn't hold, if the bears don't show up, then the euro will go to that 0.786 level. I suspect what we're going to see, it's going to happen right around here because we are out near that overbought territory in the marketplace. So that is on the euro-US dollar currency pair. Now let's go take a look at some of these stocks here that are popping and dropping. Let's start off with Ulta Salon. Let's see, were they out with numbers here? After the bell last night, Ulta's first quarter profit up 20%, topping estimates. Let's see if I can find out what they actually did out here. Net sales looks like they were, well, they're in the range. What do you mean in the range? Don't they have an accounting system that says exactly what sales are? Their same-store sales, comparable sales, up 4 to 6%. Have you ever been in an Ulta Beauty salon? I went in there one time, and what a selection of shampoos and whatever else it is that they had in there. Too confusing for me. Of course, I'm just a guy, so it becomes pretty easy when I'm going to just grab off the shelf. They did, looks like net income, $41.8 million versus $34.9. So ULTA is the ticker symbol. So let's go see what, in fact, it is doing, having a nice, healthy morning out there. Gapping up this morning. Let's go pull this stock chart back, see what it is doing, what it's going into. I see a lot of gaps out here in Ulta, so does it know which way it wants to go? This used to be a darling out here. Of course, that darling fell apart big time on March the 18th, 2.4 million shares to the downside. So what is this doing right now? It's just going back up into an area where it had recently broke down. In fact, it touched that area, and it looks like at the moment here, the folks that were inside this equity were just glad for it to get back there. It's sold off a bit since then. That gap down, that first gap down that we're looking at here, first breakdown, I should say, is really from February the 13th. On the that had 320,000 shares on that session. Now, it's already done more than that today, volume-wise so far, in just the first 13 minutes of trading, 1.8 million shares. But the benchmark on this is really that downdraft on the next day on February 14th, 7 million shares to the downside. So it's coming in there with some decent volume. That would be a positive. If it closes inside the price level of 98.26 out there, it will have closed that window. If it's coming in there with more than volume of 6.9 million shares, that would be a super positive here. It's over the swing point, most recent swing point, which only has 1 million shares, so it's taking out a swing point from May 21st out there. You always have to be careful, though. When this thing does fall out of bed, it will revisit, because this is a untested high-volume low out here. It will retest that March 15th area, and that is in the price range of 72.51 up to 76.93, 13.8 million shares out there. Now, let's pull this back a bit further here. In fact, we're going to go to a weekly chart on Ulta Salon. Because this would say, well, first the A to B equals CD pattern, the possible A to B equals CD pattern, that this could be setting up to the upside. You'd come off of that high volume low. It will be back there at some point, folks. But right now looks like the potential A to B equals CD up. Let's go see if this will set up a butterfly pattern out here. Would take you to about 107.45. Now, how are we going to identify that butterfly pattern? We're going to come to the most recent swing point high out here, which would take us back to September 7, 2012. And I'm just simply going to go from that high now all the way down to that low, that high-volume low that will be tested. And what we can see is the 1.272 expansion actually takes you into the 112.14 area, which is also a 1 to 1.272 A to B equals CD. So also coming into that swing point that we use, that September 10th swing point, that only has 3.1 million shares. The low of that is 99.26 out there. So if this can really get some energy flowing into it, move into that 99.26 level, take that out, where this would actually travel up to, it would complete that A to B equals CD. It would move up into about that 113 area. If we take a look at what that butterfly would actually look like on our screen here, we'll go ahead and draw that in. We'll give it some wings. Nothing like giving it some wings out here. And that would be your 1.272 butterfly sell pattern. That would be an Ulta Salon. But you got to be careful. You have to really, really be careful. I don't know what's behind this day out here, this high-volume down day on March the 15th with 13.8 million shares. But this equity at some point in time will be all the way back down there. That was on Ulta Beauty. Let's go check out Carl Icahn, IEP. He actually is the leader in the clubhouse out here. Let's go see how Carl Icahn Enterprises is doing. This looks pretty nasty. As we come back here, take a look at the volume. What is this volume bar out here from March the 1st? This thing has 2 million shares to the downside, but let's take a look at it today. Let's see if there's any news behind the move out here. Let's see. Announces pricing of depository unit offering. Anyways, I just pulled it up. There's not really a whole lot for us to take a look at here. It's not very much of a liquid instrument. 180,000 shares, 240,000 shares. This morning moving down already with 444,000 shares out here. Where's this going to come back to? Looks like if it takes out the swing point low from June 6th, it'll come back to this gap out here that was created on April the 8th, right around the 58.50 level. Let's go check in on BIB, Biogen, BIIB out here. Let's go see what this is doing, not BBI, BIIB. not IIB, BIIB. There we go. This thing has been a huge winner, but lately it's had some trouble. So let's go check out BIB here. This thing had moved down. It's trading down into the swing point now from June the 5th. That has 2.3 million shares. You are inside. Well, it never really got out of it. It got out of that swing point just for one day with 1.7 million shares on June the 7th out here. That was, let's see, today's Wednesday, Tuesday, Monday. That was Friday's session out here. So you're back inside that swing point low. It wants to test it. That low is 209.87, 2.3 million shares. This morning, it has already traded 278,000 shares in the first 15 minutes, so it's got some decent volume here this morning. This thing has got some room to move to the downside, and ideally what it will do is it'll come back to this last sign of strength out here. This is Biogen, and this should be March 28th. You'd love to see it come back into somewhere around the 186.36 level. Ideally, it would come back and actually tag the high of March 27th, which would be 184.17. Close back above it. Do it on less than 2.4 million shares. It really only needs to do it on less than 4 million shares. But if it could do it, tag that area on less than 2.4 million shares, that would be your buy inside Biogen, and assuming that there's no major volume coming out of this equity, then the volume I would actually go ahead and benchmark would be that 4 million share breakout day on March 28th out here. So that is, we'll try to keep this one on my, well, at least I'll put it on my notepad. Because it will be on my watch list out here because it's been a nice equity, and that would be a nice buy coming back to its breakout area and doing that on lighter volume. You can also see right now at the present time your 200-day, we're looking at a daily chart, exponential moving average is at a price level of 177.52. So a lot of reasons for Biogen, BIIB, to get back into that area. And this thing here has been a rocket ship. And not only that, coming back into that area, folks, let's take a look at off of the last swing point low to the high out here. That pullback at 0.618, and it's a nice A to B move, 139 to 242. That, folks, we want to keep our eye on Biogen. We just don't want to buy it today. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow is up 67 points right now. S&P is up 7, Composite up 10, Russell 2000 up 4 points. And let's go check in on natural gas. You know, the good kind, not the kind you might have after eating a couple of bean burritos out there. We're taking a look at the continuous contract here in natural gas, trading out at $3.75 out here. Now, this is setting up a really, really nice pattern out here. It has not completed today. Somewhere right around that 360 mark. What we can see there is that would give us a 0.618 Gartley buy pattern, a nice 1.618 expansion of our B to D swing point, if you will, our B to C swing point, which completes that D area. So you've got nice Fibonacci numbers coming together as well. We're seeing a little bit of a bounce this morning here, and that is to be expected because if we take a look at the relative strength, relative weakness indicator out here, you can see it's down at that bottom. It's down at that 30 level here. So it's at nice areas where we've seen some bounces. In fact, if we come back and take a look at the last time it was really at those levels was when there was a nice bottom here that was formed back in April of 2012 out at the lows out there. In fact, the red lines out here, really we're going to call those the trend lines because I'm not using the co-located opens and closes here. But just coming off of the trend line, we can see that it's traveling, prices traveling nicely with inside that, created a real nice 1.618 butterfly sell pattern out here. It didn't extend all the way up to the top. That's why we always use the range. But you're looking for areas where you've got nice Fibonacci summation numbers coming together all at the same time. That's really what is setting up here inside natural gas. If we take a look at, is this near the 1.272 expansion versus the 1.618, we'll go take a look at our B to C swing point. And 1.272 it most certainly is, which is $3.76 out here. You're trading at $3.75 right now. But this candle here, not bullish. So you really want to use that same thing. If we get a bullish reversal candle, that may say, you know what, the 360 area is not going to be hit, and this might be the buy because you're at a 1.272. But I suspect then the better buy would be, keep on coming back to us, baby. Keep on getting a little bit lower. Go ahead and complete this pattern. Then go ahead and give us a nice big bullish engulfing candle, and that might set up a nice little trade for you. And you can use the UNG as the ETF for the trade inside natural gas. Let's see. What do we have here also? Cooper Tire. Let's go see the premium that's being paid for Cooper Tire being bought out by a company in India. So let's see. CTB is the ticker symbol. Look at that move up there. What a nice premium. Let's see if this thing has ever traded up at that level. And looks like let me put this on a monthly chart out here. Looks like it's not. Looks like all shareholders inside this equity, everyone is having a good day out here inside Cooper Tire. Now, just out of curiosity, just wonder if we have a expansion of the July 2007 swing point, go from that high all the way down to the low out here, which is at $2.96. How about that? $2.96 back in March of 2009. Right now it's at $34.56. $35.45. Wonder if somebody used the when they figured out the buy price on this, if they went ahead and used good old Leonardo Fibonacci summation numbers, because it's pretty darn close out there. $35.45 versus a $34.57 that it is at here right now. So that was on Cooper Tire. I hope you have a little bit of that in your portfolio. We've got Gigamon Inc. What is this, an IPO? Let's see here. Yeah, that's an IPO. That's trading at $25 right now. We won't spend any time on that. We will take a look at Celgene. We'll have to do that during the next show. Folks, if you're off to start your Wednesday, have an incredible Wednesday, and always remember, you have an amazing power within yourself, and that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Wednesday, folks. See you soon.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.